an internet services company, and a food service equipment company. Just a couple of the hidden gems that are out there for your consideration. Tracey Ryniec, our value strategist, uncovers all of these, not only in the value space, but in all the spaces out there, right? It's across the board.
Yep, including growth.
So with that in mind, I've never heard of these, but you're going to tell us why they're hidden gems. J2 Global is the first one.
Yeah, these guys are in Los Angeles, and they're a digital media company, but they have some business in the cloud. So when you do like eFax or eVoice and some of those services, you might use them.
Okay.
And then they have on the actual digital media side, like some of the magazines and things like that that are only available in digital. Now, what's interesting with them is that they just recently bid on the Gawker media empire, and they actually lost out on that. They bid $90 million. It sold to Univision for $135 million, which is too bad because the analysts actually did like the possibility of them owning Gawker and that they would have been able to monetize it. But they have a ton of cash. They have over $400 million cash on hand. They're generating over $250 million in free cash flow a year, which is huge.
Yeah.
So they got a lot of money. They're ready to deploy it. This last quarter, they only deployed $28 million. They did acquire 6 smaller companies, but that's like nothing. They have said that they're looking for some bigger acquisitions like the Gawker, which was an opportunity. So we'll kind of see where they spend that money. But you can see the earnings estimates here are jumping up because they did beat, and analysts like what they're seeing. You get big earnings growth this year, and that's even without
74%?
the big, without even the big acquisition. So things looking good across the board. That's why you get a high Zacks rank of 2 here. And then if you look at the chart, if I can get that up, here we go. You can see it's had an iffy year here, like everybody did. It sold off big to start the year. It's rebounded some, but still very attractive. This is what I would consider to be a value stock. It's trading under 15 times, a little around 14 times, and you get a dividend because they have all that cash. And they just raised it 3%, so you're yielding about little over 2%. And that's not a bad thing either while you're sitting there waiting for them to acquire some more companies. So I like this space, and I really like this company, which I'd never heard of either. So now I'm aware of it, and it's on my radar.
Then I don't feel so bad.
Yeah.
And then the other one in the food service equipment space is Middleby.
Yes. Now, we were talking about this before we shot this, and it's kind of surprising. You and I have both not heard of Middleby because they are based here in the Chicago area, and they've been around for
Illinois, right?
Yeah, and they've been around for forever. But obviously, we're not working in the restaurant
food service industry, right?
So we haven't come across them. But they do own Viking. They acquired that name not that long ago, and so they do have a residential side. So they make a lot of food service equipment on the hot side for restaurants and hotels and all of that, and then also a little bit on the residential side with the Viking and a whole bunch of other names people are familiar with, I think. But again, similar story with J2. Really great quarter. They beat really big, and so the analysts are really pumping up these estimates based on a 26-cent beat from the second quarter. They have really good international sales. The U.S. is just kind of flat, but international is growing in the double digits. They see that still being the case in the second half of the year. People were a little concerned when you look at this chart about Brexit. You can see that big sell-off there. That's the Brexit sell-off because they do have a large international business. Shares have rebounded off of that. If you can get them, on a pullback here, they'd be a little more attractive to me because they are trading around 27 times. So they're not cheap, but you once again get double-digit earnings growth for this year and next year, and the outlook looks real good. So I like these guys too.
Okay, and no dividend on this one.
No dividend on this one. No, you're getting the pure growth play here.
Unfortunately.
That's right.
Do you own either one?
I do not.
Okay, check out more stock information on our website, Zacks.com. And you may also want to search the website for a couple of podcasts that Tracey hosts. They're up there from time to time. She does 2 new ones each week, so you may want to look out for those. All that information you can link to right from the homepage at Zacks.com. With Tracey, I'm Terry Ruffalo.